This video is best viewed in higher definition. To enable, click the Settings button at the bottom of the page, just here. Then click the drop-down box under Quality, and then select the highest definition offered, in this case 720 HD. Enjoy the video. So I'm now going to look at the 5th and 6th screen of DTFL Pro. 1, 2, 3, 4. So the 5th screen is the stop loss and initial move screen, which is this one. And then we're also, in the same video, we're going to look at locking pips profit. So we'll start off with the stop loss and initial move screen. It's a number of inputs here, and I'll explain what they mean. The first one is here you've got a mutually exclusive selection to make. Either you can always use a fixed stop loss, or you can use a variable stop loss. You can't use both, obviously. If you click one, the other one deselects automatically. So always use a fixed stop loss. If you put 20 in here, then whenever an order is placed, then the stop loss will automatically be placed 20 pips from your entry. Most people will understand that. So if an entry is made, the stop loss would automatically place 20 pips from your entry. Alternatively, if you select variable stop loss, then when the entry is placed, then nearly always, and I said nearly always, majority of the time, there is an exception which I'll talk about in a moment, your stop loss will be placed this distance, whatever number you put in here, in this case 6 pips above the recent high or low. If you're talking about upper PP lines, then it'll be above the recent high or low. If you're looking about a lower PP line, then it'll be below the recent low. So on this situation here, the example I've shown you here is that there's a PP level here in red. We've got a stop run here. There's another candle, another candle, another candle, and then there's a confirming candle here. So the confirming candle was here, and then there was a pullback and an entry was made actually at the same level as the PP line. So there was an entry made here. If there was an entry made here with the fixed stop loss, then the stop loss would be 20 pips from entry, which would be about that position there. However, by using the variable stop loss, the EA will look back to find the recent high, so go back all the way back to the stop run and a further 4 candles, 1, 2, 3, so look back all the way to here for the recent high, which in this case is here, and then it will automatically place the stop loss 6 pips above, which is where that black line is. 6 pips, that's about 6 pips then. So that's where the stop loss would be placed. So hopefully that's quite self-explanatory. Again, if an entry is taken here with a fixed stop loss, the entry would be placed 20 pips from entry, which would be about here. With a variable stop loss, the EA will automatically find the recent high, go back to the stop run plus 4 candles. That is controllable, it doesn't have to be 4. That's another input which I'll show you at a later stage. It's defaulted to 4. So look for the recent high, in this case it's here, and then it will place the stop loss 6 pips above the high. And I did say that happens nearly all the time. There is a circumstance, which is this one here, revert to fixed stop loss, current price is equal or less than this amount of pips from your proposed stop loss. So when the EA comes to calculate where 6 pips above the high would be, if when it's about to place that stop loss 6 pips from the high, if current price is within 10 pips, then it will not place a variable stop loss. It will instead revert to a fixed stop loss of 20 pips. So in this situation, let's say the entry was here. Okay, so let's say an entry, we had a stop loss and somehow there was an entry here, like the price action, say it pulled back to this point, and the entry was taken here, when it goes to place the stop loss, a variable stop loss, it will measure 6 pips above the high, so it will get to this line, and before it places that stop loss, it will make a final check and it will measure the distance between the stop loss and current price where the order is just being placed. And if it is less than this amount, in this case 10 pips, and in this case the current price has just placed this order, that's only 7.5 pips away. If it is less than 10, then what you're telling the EA is, well, there isn't enough room there for my stop loss, it's too close, I needed a little bit of room to allow it to breathe, let the trade breathe, give it a chance to move off, in which case it will not place a variable stop loss 6 pips above the high, it will revert to the figure you put here, in this case 20 pips. So it's therefore crucial that you always have a fixed stop loss set here, even if you are selecting the variable stop loss. Because majority of the time the variable stop loss will be applied 6 pips above the high in this situation. However, if when the trade is placed the stop loss would be within, in this case 10 pips, then the variable stop loss will be cancelled and a fixed stop loss will instead be placed at this level. So of course you can change this, you could say if it's within 5 pips. So if the stop loss in this case then, because this was 7.5 pips when the order was placed, so current price would have been within 7 pips, so that isn't 5 or less, so in which case it would still place a stop loss 6 pips above the high. Obviously you've only got about 7 pips of risk, but you've got the chance that you could just pull back a little bit further and hit your stop loss early on before it's had a chance to move off. So it's all a judgment call about what you want to do. So there's so you've got your fixed stop loss, your variable stop loss, and then you revert to the fixed stop loss if when the variable stop loss was going to be applied, if it's less than this amount, then it will not use a variable stop loss. It'll automatically default back to what you've put in here, the fixed stop loss. So that's those ones. As I say, these two are mutually exclusive. The last one here is when the initial move is, if you want to select this, you don't have to, but what will happen is when your trade has moved off into a certain amount of profit, in this case 15 pips, what you're telling the EA to do is move your stop loss to break even level. So once it gets to 15 pips, so the trade has moved off, it's moved off south, you've got 15 pips of profit from the original entry. As soon as that point is reached, then the EA will automatically move your stop loss to break even level. Now break even level, if you've got 0 in there, will be the same as your entry price. So it will move off 15 pips into profit. When it reaches 15 pips of profit, it will move to break even level. Your stop loss will move to break even level. In this case, when it's 0, it will move to the entry price. However, if you've put, as I always do, tend to do, 2.0 there, what it will do, it will move it to the entry price plus 2 pips. Well, in this case, it'll be entry price minus 2 pips. So it's moving into 2 pips of profit. The reason I do this is because the broker I use is commission based, has very tight spreads, but they charge a flat commission on every trade, dependent on the size of the trade, of course. And by moving my break even level to plus 2 pips of profit, it allows for the trading cost of commission plus spread. So I know that when it moves to break even, if it comes back and hits my stop loss, I am actually covering all my costs of the trade. Whereas if I did actually just move it to the entry price and it came back and hit, then what would happen? I would actually make a small loss because I would still have to pay the commission and any spread. So that is why you can set the break-even level there to what you wish. Run over them again. So there's the fixed stop loss, and you can put any figure in there you want. You really must put a figure in there, because even if you're not using a fixed stop loss, if you're using a variable stop loss, there is a possibility that the variable stop loss won't be applied in certain circumstances, and the variable stop loss will revert to fixed stop loss. So you need to have something entered here. That's the fixed stop loss. If you choose variable stop loss, then the stop loss will always be placed this amount of pips either above the recent high or below the recent low, unless when it goes to place that stop loss, current price is equal to or less than this distance away. So generally I have 10 in there. So if when it goes to place the stop loss 6 pips above the high or 6 pips below the low, if current price is within 10 pips or less of that stop loss, then it won't place a variable stop loss. It will revert to the figure in here, in this case a 20 pip stop loss. Then move to break even. If you wish to select that, you don't have to have it, but if you do select it, when your trade has moved off to 15 pips of profit, your stop loss will be moved to break even level, and the break even level is your entry price plus whatever you've put in here. In this case, it'll be entry price plus 2, which is 2 pips of profit. So on a sell, if the entry price was here, this red line, the stop loss would be moved to plus 2 pips or minus 2 pips below it, i.e. 2 more pips of profit. So that if the current pricing came back and hit my stop loss, it would actually close at plus 2 profit, covering all my costs for commissions and spread. So that is the stop loss and initial move screen. I'm now going to move on to the lock-in profit screen, which is very similar to what I've just explained. You can choose either or all of these. You can have 1 lock-in profit or 2, your choice. All this does, it gives you a way to manage your trade. As the trade is running, what it will do is when it reaches a certain amount of profit, it will lock in a certain amount of that profit by moving the stop loss. So in this situation here, when your trade has moved off to 20 pips of profit, it will lock in 5 pips and move the stop loss to plus 5 pips of profit. And then when it reaches 30 pips of profit, it will move the stop loss again to plus 10 pips of profit. So in combination with the earlier one I've just been showing you, let's go back. So we've got the stop loss, the initial move, when 15 pips of profit is achieved, the stop loss will be moved to break even plus 2, locking in 2 pips of profit. You could think of it like that. And then when it moves to 20 pips of profit, it will then move to plus 5, an additional 3 pips, moving it to plus 5. So you're locking 5 pips of profit by moving the stop loss. Then when it gets to 30 pips of profit, it will move the stop loss to plus 10, locking in 10 pips of profit. So hopefully that explains the stop loss and the lock-in profits screens. The next screen I'll be discussing is the standard and ADR take profit screens.